One of the questions too, which is much more general in nature, is the difference between term and whole. And so we'll have you answer that. And then should certain life stages people be looking and using them for different purposes?
The difference between term and whole, we could spend 6 hours on that one. I'll try to do the best I can in a few minutes. Term insurance is like every other kind of insurance that we own. You pay a premium for a period of time. If an event happens during that time, specifically death, the insurance company pays. If you don't die during that 1 year period, then you're offered a renewal. Sometimes the rates with term insurance are guaranteed for as much as 30 years with the level premium. So they are much better than they were when I first got in the business. There was no such thing as even 20-year term when I got in the business, not even 15. Every policy just went up in price every year as the risk of death went up. Nowadays, we can lock the price in for as much as 30 years, so these term policies are outstanding. We also have policies in the term arena that will guarantee your money back if you don't die at the end of the 30 years, which are called ROP term. That's kind of an in-between hybrid category. Permanent life or whole life, which is also mistaken for, I call it permanent life insurance because in the permanent category, there's whole life, universal life, variable life, all kinds of different permanent products that do more than just collect a premium and then pay if you die. They develop living values and or in many cases, they have a lifetime guaranteed premium. So in order to win the game of life insurance, we talked about the fact that you have to have your policy in force on the day you die. Now, any policy can work to win the game of life insurance, assuming you die with the policy in force. The problem is, for term insurance or temporary insurance or the stuff that's very inexpensive to actually work such that it turns out to be a good deal when it's all said and done, you got to do something that you might not want to do, and that is die before you're supposed to. If you look at the price of a 20-year term on a 40-year-old, for $500,000, it's $30 a month. $30 a month, that's $360 a year, that's over 20 years, that's roughly, how much is that, $17,000? I mean, the odds of you dying, or is it even that much? I don't even think it's that much. But the point is, the odds of you dying during the 20 years is so slim that the odds are it's going to work out for the insurance company, and then the policy's over, and no, you didn't win, the insurance company won. If you want to win, you have to have a policy that's affordable, that you can afford to keep until you die. If we look at that, I just bought one. I'm 58 now. I was 55 when I bought my last permanent policy. It was roughly $10,000 a year, which sounds like a lot of money for $1 million policy. Wow, $10,000 a year. I could have bought a term policy for probably $1,500, but it would have expired before I die. This $10,000 premium never expires. I can pay for it for as long as I live. And let's say I live, I guess my over-under, if you were betting on me in Vegas for when I'm going to die, would probably be about 30 years. Okay, 85, that's when my dad died, 85. 30 years of $10,000 is roughly $300,000, or it's exactly $300,000. And when I die, my family gets $1 million, which is a $700,000 gain, 100% tax-free. What if I live longer? Well, how long could I live to turn that into a bad deal? Am I going to live another 100 years at age 55? I doubt it. Maybe we'll find a cure for death by the time I'm old enough. But realistically, I don't see much likelihood of me living long enough to turn it into a bad deal. So how does the insurance company ever make money on guys like me? Well, I can tell you, they love me today because I've brought them 200,000 customers, but the industry is going to hate me when I die because I am going to die with my policies in force, and they're going to say, why the heck did we sell this guy so much life insurance? Because we lost money on him. And so the real difference as I see it, if you're looking at life insurance as a protection product, as a death benefit product, is that permanent life insurance, whether it's whole life, universal life, or any other kind of permanent life insurance, if it's designed to remain in force until you die, and it is kept in force until you die, it is a winning financial instrument. It's a winning proposition. You and your family will end up collecting way more out of the life insurance industry than you ever could have possibly put in. Term insurance, if you die young, it's an even better proposition because it's so cheap and you're going to collect so much money for so little. $30 a month for a $500,000 policy. I mean, how does that work out for the insurance company? Only because so few young people end up dying, and the ones that do, they pay promptly. There's no difference. I mean, all the carriers that we do business with, in fact, most of the carriers that even issue life insurance are A or A plus rated. There's no issue. It's not like car insurance where you buy a crappy one and they resist claims. They all pay their claims. And so, the big difference, as I said, if I had to point it out between permanent life insurance and term life insurance is that permanent life insurance is designed and it is affordable and it has a level, predictable premium for life, and you can keep it until you die so that you can actually have a chance of winning the game of life insurance.